Joining us now to discuss is Hassan Bassiri. He's the portfolio manager at investment firm Arca. Welcome, Hassan. So, have we reached the top of this bearish rally, or does Bitcoin have more room to advance?
We think Bitcoin has more room to advance, but it's going to be a slug. It's not going to be you're not going to see Bitcoin rip to 30,000 overnight. And a lot of that's just driven by macro and ETH's outperformance into the merge. Crypto moves on narratives, and right now the narrative for the space is based on the merge and Ethereum, and you can kind of see that in the ETH Bitcoin ratio. So we don't think it's done. Go ahead.
A lot is also weighing on macro factors. That we have the FOMC minutes that will be released tomorrow, maybe giving some more clues as to what the Federal Reserve will do at the next meeting. So what are you watching for?
We are just looking for them to be data-driven, meaning that they don't have set in stone amounts of hikes that they're going to stick to no matter what. If the inflation data gets weaker or better, they'll reduce the amount of the hike, which should be bullish for risk and therefore Bitcoin. Holistically, we think this year is going to be pretty tough for Bitcoin, not just because of the macro and political landscape, but more so just structurally what happened back in June with Three Arrows Capital and a lot of the lenders holding GBTC as collateral. It makes it really pretty tough in the near term for Bitcoin to rally meaningfully relative to Ethereum and some of the other layer one tokens.
I noticed in Arca's newsletter on Monday, Arca said that Bitcoin is not an inflation hedge, not a defensive play. It's correlated to the markets, and it needs a new narrative because I guess apparently the old one isn't working. And maybe you could dive into that for a bit.
Yeah, I think, okay, so, really, if you go back to March of 2020 when the bull run started through pretty much the Coinbase IPO last year where Bitcoin topped at 65,000, Bitcoin had a inflation hedge, store of value, decentralized hard money narrative, and you got a lot of new entrants into the space. BlackRock got in, and tons of insurance companies got in and bought it to diversify their balance sheets, and it was all over the media and all over the news. It performed really well. It went from I think 6,000 or 7,000 up to 65,000 in a 15-month span. After that, you had some macro headwinds with raising rates and inflation and tech stocks unwinding and coming off their highs, and Bitcoin really suffered. Bitcoin went from 65,000 to essentially back down to 18 2 months ago, and so our view is that kind of a move. Bitcoin's never existed in an inflationary environment. So its first test within an inflationary environment, which is what we're facing right now, it's hard to say that it did well when it fell, 67%. So our view is that thesis on a standalone basis on a short time frame, that thesis has been broken because it didn't withstand well. So now the other theses are still intact. Decentralized hard money, store of values take dozens and hundreds of years to play out. Bitcoin's still a volatile asset. When its volatility dies, sure, it can be a store of value. But the point is that for a lot of people, Bitcoin being an inflation hedge and decorrelated asset, that thesis was broken. And so now we have to, one, rebuild the trust in the asset, and two, you're seeing a lot of more institutional types interested in Ethereum because it does have fundamentals that you can model and value with its price to earnings. And, we burn gas, which is ETH, when people use the chain. So you can think about what it's worth on a relative basis to fintechs and other things like that. Whereas Bitcoin's supposed to kind of be just the most lindy, the safest asset, like the digital gold, if you will. I don't really love that analogy, but that's what people like, so.